This candlestick right here, and I have an arrow below and above the candlestick I'm denoting. That candlestick's open down to its low. That is its discount wick. In other words, it's the wick below the candlestick. We call them shadows or tails, and anything above as a wick would be obviously the wick. Okay, so I'm denoting that midpoint or consequent portion of that lower portion of the candlestick that makes that wick or discount portion of the candlestick. That's this line right here, and I'm projecting it in the future. The next candle after that, you can see here, I'm denoting it with that arrow here and that arrow here. I'm doing the same thing here. That wick, I'm highlighting the midpoint. This is my gray pool, okay? Algorithmic gray pool, you extend that in the future, okay? And that is your portion of where you can get in. Now, I already know what you're thinking. Wow, that's really not anywhere close to inversion fair value gap or first presented fair value gap. Isn't that chasing price? I'll get to that in a moment because I already know what you're thinking. But right now, I want you to take a look at the entry. Okay, here's the entry, and look real close right there. You'll see that that is me getting in at the low of the gray pool. Okay, now I'm going to show you up here, me getting out of the trade right there. There's a little caret symbol saying I'm getting out at the high of the volume bounce in the daily chart. Folks, that is as perfect as you can get without getting in at the inversion fair value gap here. When we move away from the first presented fair value gap, because it's doing two things here, acting as a inversion fair value gap, which I told you it was going to act as way back here. Okay, so before it delivered it, and you can see on X, it goes down through it for the purposes of upsetting the liquidity that's resting below London's low and this low that formed. And then they rally it back up into the inversion fair value gap candidate. But does it offer that validation? Nope, it goes in there, goes right back out. You have to wait. You got to wait. And the market goes below that once more and then rallies above it, trades back down into it, and then runs away. That's validating it. That is verifying that that is absolutely what I said is going to be at 9:47 a.m. Eastern Standard Time. It was going to deliver this way. Now I have to find another way of getting in. Now, let's say you didn't want to use the gray pool. Maybe you don't understand it. Maybe you don't want to touch it. It's complicated. It's complex. You're making it difficult, ICT. Okay. Well, I'm teaching technical science. If you want to do simple stuff, you can do my immediate rebalance, which is this candlestick's high. It rallies through it here, and then the next candle opens, trades right back down to that candle's high. That's an immediate rebalance. And the next candle or the next candle after that, price will start running.